10 years from now, the price of your electric car might depend on a mining deal you didn't even notice. India just signed a major mining pact with Brazil. But how can a deal about digging rocks out of the ground decide the future of EVs, renewable energy, and even Indian stocks? This is not a mining story. This is a power story. Because the countries that control critical minerals control the industries of the future. And by the end of this video, you will understand why lithium and rare earths are becoming more important than oil, why India is diversifying supply, and which sectors in India quietly benefit from this move. When people hear mining, they imagine coal or iron ore. But this fact focuses on critical minerals: lithium, rare earth elements, copper. These are the backbone of electric vehicle batteries, renewable energy storage system, wind turbines, defense electronics, advanced semiconductors. Without lithium, EV batteries cannot scale. Without rare earths, high efficiency motors don't function. Without copper, electrification slows. And here is the important part: global supply chains for these minerals are highly concentrated. When supply is concentrated, pricing power is concentrated. And when pricing power is concentrated, dependency becomes risk. But what happens if that supply is disrupted? Imagine this scenario: a geopolitical conflict disrupts the mineral export. Suddenly, the battery costs rise, EV prices rise, manufacturing margins shrink, renewable expansion slows, stock markets react instantly, investors hate uncertainty. India imports a significant portion of the critical inputs. If your industrial ambition depends on imported raw materials, you are exposed. That exposure becomes a strategic weakness. So, where does Brazil come in? Now, Brazil is rich in mineral reserves. By partnering with Brazil, India diversifies the sourcing, reduces overdependence, improves the long term supply visibility. So, this isn't just trade, it's supply chain insurance. And markets reward supply chain visibility. When investors believe raw material risk is reducing, long term confidence improves. But this isn't just about national strategy, it's about sectors. This pact has ripple effects. Let's break it down sector wise. When it comes to EV manufacturers, stable lithium access will improve the long term planning. When it comes to battery makers, raw material security will improve the cost forecasting. When it comes to renewable energy firms, copper and rare earth supply will affect the expansion economy. When it comes to metals and mining companies, domestic partnerships may unlock investment. And when it comes to auto sector, battery cost is a major EV pricing component. When long-term mineral access improves, valuation models adjust. Markets don't wait for factories to be built, they price the strategic positioning. But here is a global context most people ignore. The world is in a silent race, a race for lithium, rare earth elements, battery metals. This is not loud like the oil wars. It's quiet, but it's strategic because whoever controls the inputs controls the industrial level. India is signing a mining pact with Brazil is not a random headline. It is positioning. It is reducing vulnerability. It is preparing for the EV and renewable future. Oil defined the last century. Critical minerals may define this one. The question is not whether EV demand will grow or not. The question is who controls the material that power it.